Grant Thornton has released their deal tracker report for activity in November. Let's take a closer look at the trends. I'm joined by Prashant Mehra, partner at Grant Thornton. Hi Prashant, thanks so much for joining us with all those details. At the outset, let me start by asking you the question that's on everyone's mind. How has demonetization or the delay that we're seeing in GST affected deal closures? Now, in your note, you do mention that it might have some short-term impact. Is that correct?
Yes, I believe that, it's still early days to say, firstly, the GST delay is not really certain, and it's only a delay by 3 months. Secondly, as far as demonetization is concerned, I think it's still early days to first see what will be the impact of demonetization on the economy. I think we'll get some clarity in that around January or something. So yes, it would definitely delay the deal closures, but I think that's going to be a very short-term impact. And as we go into the closure of the financial year, when deal activity anyways ramps up, I think it will probably make up, and we should not be hit too much in terms of deal activity as compared to last year.
Right, Prashant. So, what about the trends? From a brief perusal of your report, it seems that M&A has been doing well, but PE seems to have suffered a little bit of degrowth. What kind of trends are you witnessing from where you're seeing it?
Yeah, if we see the overall deal activity, we've seen about 1,400 transactions contribute about $46 billion. It's a nominal 10% growth as compared to the same period last year. But yes, the product mix between M&A and PE has we witnessed a sea change there. Private equities is gone down a couple of $1 billion, and we've seen a 25% degrowth there. M&A has generally gone up, but again, cross-border has seen a degrowth. So that's the key and primary factor which has driven the growth has been domestic M&A, which has seen about 60% growth in terms of values.
Right. Also, startup sector seems to have been doing better compared to the others. Do you expect that trend to continue, or do you expect another sector to topple startups going forward? Where do you think more deals are going to come from?
So if we look at the sector spread which we witnessed in the year so far, M&A has been dominated by core sectors such as pharma, healthcare, telecom, manufacturing, and energy and natural resources. On the other hand, private equity has seen about 40% values come from IT, ITES, e-commerce, and startup. Real estate and banking have also contributed a bit. I think going forward, one interesting space to watch out for, which will probably come out of the demonetization effect, will be the m-commerce and digital payment space. That is particularly a space where we'll see much action. And as far as general M&A is concerned, I think the core sectors would continue to dominate the space, and we'll see a lot of traction there.
Right, Prashant. Unfortunately, these days we're always short on time on the show. But thank you so much for joining us, and we'll keep in touch with you about the next year's report, and we look forward to having the annual report as well by the end of the year. So we'll speak to you soon, perhaps maybe in a couple of weeks then.